Chief of National Stock Exchange, Ashish Chauhan, is a very, very busy man these days, given the spate of IPOs we've been seeing. In fact, Mr. Chauhan himself, given his 3-decade leadership in building and leading market institutions, is now an institution in himself. Today, we are here at the atrium of the National Stock Exchange to have a very, very in-depth conversation with Ashish Chauhan on this special edition of IPO Baatcheet. Mr. Chauhan, thank you so much for talking to us. As at the Startup Policy Forum, we're very excited to see what is going on as far as the new age IPO wave is concerned. Sir, you've been a busy man, as I said. You've been here at this atrium with that bell ringing, the opening bell, the closing bell. Share with us a little more about this excitement and exuberance we're seeing around new age IPOs.
In a way, last couple of years have been very good for IPO market specifically. In calendar year 24, we did 269 companies listing.
Sure.
Out of which around 69 was main board listings, 200 SME listings. And this year already we are in November now, so we still have 1.5 months to go. We have done 180 companies already. And so broadly, one every working day, you can say.
And that makes your schedule very busy.
Absolutely.
Yeah. So this atrium has a lot of energy when we see the, opening bell, closing bell. I was myself here with you on the day of Grow's listing in the morning, for instance. A lot of exuberance. Some of these are blockbuster IPOs, big ticket IPOs that India is seeing. And finally, just so much liquidity that is coming in. These new age companies, many of these could probably be even just a decade old. Just how quickly has the face of India's stock market changed? And more importantly, India now front of center as far as global markets are concerned.
And that has been a hallmark of India's growth over last almost 30 years. That is what I call services-led growth, technology-led growth. And that is like you came for Grow, but Zomato or Swiggy or Physicswala and many more examples of young leaders coming from Mofussil towns across the country, coming in, starting their businesses, raising funds from the markets and listing themselves, are actually giving that hope to every nook and corner of India that if the next door boy or a girl can do it, I can also do it. And that's where I think the issue when we grew up 50, 60 years back was that we had no role models to follow because only a certain class of people could do business. Today, now India is open for business and everyone is welcome. So that's the message I think youngsters have taken. And that's a great sort of churn that is going to keep us in good stead in next 20, 30, 50 years.
Absolutely, sir. And as you said that, the fact that we've seen some of these companies, build, start, scale, ground up. And today we here at this very, very special moment, ringing the bell, I think is a vote of confidence in India and how India's new age story is really building, how new India is building. I think what's important to touch upon is the fact that, we are seeing clear trends where domestic retail participation is the story of new India. The fact that today we're not as dependent on foreign flows, the fact that we have a very robust retail participation in the Indian stock markets is giving that confidence that this is a trend which is not just a trend for today, but a trend that's here to stay. We're not talking about hot money anymore.
So in a way, when Mr. Modi took over, I recall distinctly around 1.6 crore investors were there in 2014, April, May. And today, after 11 years, you are talking about 12.2 crore investors, unique investors at NSE. So that's 12.2 crore unique investors are around 25% women. So you're talking about almost 8.8, 8.9 crore households that have participated in the stock markets, which is almost 25% of all households in India.
Right, 25% of all households in India.
Right, given the fact that we are still a per capita low income country, or what they call low middle income country, if you look at the highly developed countries like Germany or France, they don't have that kind of numbers of 25% households investing into their markets. Is also a trust of our people that has developed over last literally 150 years, but more so in last 11 years. on our entrepreneurs by our households, right? It's a great leap of faith when you invest that 1,000 rupees from Arunachal Pradesh. 1,000 rupees for a lady investing in stocks in Arunachal Pradesh is important to her. And she's investing her money probably in a company in Salem in Tamil Nadu. She's never going to visit, but she has that confidence that that entrepreneur is going to work for her, make that money,
And get
generate profits,
right.
will not siphon off and give her share. It's such a great leap of faith that has, of course, come about because of the regulations, the regulators, the parliament, and the government and the exchanges. But broadly, it has something to do with people's confidence in entrepreneurs. So I sometimes worry, or wonder that in 79 years of our independence, we are in 79th year. What did we earn as a nation? We earned our investors, our households trust into our entrepreneurs, right? I think that's a great trust. The societies which trust their businessmen, those are the societies which are going to adapt to newer things, also create newer businesses, and also create wealth for itself in the long run.
And you've said a very important part about trust, and building that trust and retaining that trust will be very important for these new age companies as well, as they mature and understand what it means from being a private company to now being a public company, because this is now public money at stake clearly. Explain to us what would be your message right now to all the companies that are now on this path, either those that have recently listed or companies that are thinking about going the public way.
The corporate governance is the backbone of this trust. It's like a pond out of which we all drink.
Right.
And it's easy to sort of destroy that trust or malign that trust. Very difficult to build. Right. The trust is a very ephemeral thing, and it's very brittle. And so that's why all of us have to try to build that trust, not only for ourselves, but also for the people who are going to come after us to raise their funds. And in some ways, what is corporate governance, right? For me, there are asymmetry of information, there are asymmetry of power between the insiders and the outsiders.
Right.
And to the extent possible, we try to reduce through regulations these asymmetries of power and information. And that's what I try to explain to the young as well as old entrepreneurs and their boards, saying whenever in doubt,
lead on the side, right?
Take the decision in favor of the other investors, not yourself. Even if it is legally allowed, don't do that, because morally it may not be correct. And everyone, now you are the heads of the family, which is much larger. And once those people's interests are taken care, then of course your interests will be taken care.
Moving forward, we do think that already the policy environment, the regulatory environment led by SEBI, led by institutions like NSE, the kind of focus you have brought in around governance is giving a lot of confidence on market stability for India. You mentioned some of the other markets like Germany, France, and others. What's also important is that we are not seeing this level of IPO activity anywhere else in the world. The US, yes, perhaps a bit of it, but US and India, and then the other IPO markets are almost shut. What do you think has driven this excitement about India, besides, of course, as you mentioned, policy environment? Is it also a lot of the new age tech brokerages like Zerodha, Grow, Angel One that are now driving this kind of retail participation?
Broadly, you can create what I call infrastructure to collect people and their money. But if the companies which are getting listed are not giving that great returns, it may not work. So there has been a 30 years of track record after NSE was set up in 94, that there has been increasingly newer companies have given even better returns.
Right.
And that's what I think has kept that public interest alive. If you go to Japan, it's running at 30-year low of the number of listed companies. Australia is running at 30-year low. Singapore also is running at 30-year low. UK is running at 30-year low. Europe is losing companies. And that's true with almost all jurisdictions, as you said, except India and America, and to some extent now this year also China. But broadly speaking, for me, India's growth in newer companies also is reflection of Indian economy's ability, Indian society's ability to adapt to newer technological changes. And that's where the youngsters are able to adapt. India has a very young demographics, and they are able to adapt to newer technologies that's spreading out very, very fast across the nation in variety of areas, not only in stockbroking, but variety of areas. And that's creating scalable business models which are able to get good profits in the long run. And that's where many of these companies are giving good returns.
You mentioned profits, and profits remains the key, right? Because every time a company is looking at listing, the pressure on ensuring that you are profitable or on a path to profitability remains the most critical benchmark for Indian stock markets. And that's what differentiates the Indian markets as well, say, from the US markets, where it's okay to have a business that's not profitable but has, say, the numbers or the vision for being one. But Indian public investors, public market investors, both institutional and retail investors, value profitability a lot. Do you see that trend continuing, and how important is it?
Even in terms of the regulatory structures, I think we differ slightly from US in capital markets. That's a laissez-faire market where uh, the people who lose money, the government doesn't get involved. In India, the regulators also get blamed for allowing
Right.
a bad IPO sometimes, and that's why they are more careful. But broadly speaking, if the Indian markets are less risk-taking compared to the American markets, which can be more risk-taking. Also, it doesn't have to be all the people in America. It's certain class of people with more sort of this ability to invest in those risky areas also know that it is going to go away. Whereas India is a capital-starved country, so in some ways people are less risk-taking compared to America, and there are explanations post facto which we can always
Yes.
give how.
But do you see that trend continuing? Profitability will
Broadly
be.
speaking,
Yes.
India is about profitability, about transparency, about better corporate governance. America is about a faster growth with less corporate governance, less protection for minority shareholders compared to India. And those are the contrasts, but broadly speaking, we'll remain profit focused as an economy because we are capital starved and people want instant activity. And that's why you don't also see what I call moonshots in
Right.
Indian markets, while as in America, there are many people taking moonshots and some of them succeed, and that's how the society comes. While as we are people who don't look at the labs part of it. As soon as it comes out of lab, then we have thousands of youngsters wanting to get involved in that area, and that is going to happen with AI also.
We will talk about AI as we move forward, but you mentioned the term bad IPO, and I want to dwell a little bit on that because clearly nobody wants a bad IPO, neither the promoters nor the bankers nor the investors or the VC funds if it's a VC backed institution company. But increasingly, we're seeing a lot of debate around valuation, around price discovery, around pricing the IPO right. And that's a tough one because very often there is pressure, of course, for venture capital firms to deliver good exits. They have built out companies for sometimes well over a decade. And there is obviously also the pressure that, have you left enough for retail investors to be able to participate in that growth story? What's your view on the kind of debate we've been seeing around valuations of
It's going to be always there, because in some ways, when you have many IPOs which have given great returns, you create a perception that all IPOs give you returns which are sort of super normal. And that ends up building expectations on basis which you have to build further expectations. And for me, somewhere investors also have to be aware that it's like any other secondary market company. If you invest in that, there is no guarantee that it will always go up. It may go down also. And similarly,
Correct.
even IPO is basically a company's first time going to get traded, but after that, its performance will depend on what kind of markets there are, what kind of technological changes are happening in that company's businesses and economic situations across the world, across the country, in the industry and other things. And so there are many factors which affect the company's workings, even if that company had to be making great sort of have great potential before listing. And so that's why everyone else will have to be aware, become aware that this is not something where free money is available. It's a risk activity, and everyone has to be a little cautious on also going by the IPO euphoria.
So the IPO euphoria, as you talk about, your message to promoters who are too much under the spotlight sometimes, the pressure on them when they come here, right here to ring the bell, almost treated like cricket stars or celebrities, they're celebrated if the IPO goes well, they are, dissed if it's not. So your message, to all of those promoters who go through that anxiety, and also your message to investors who are now evaluating some of these new age companies, that will be be probably very different from say, legacy companies that have been listed on the markets.
No, as you rightly said, there has to be some money kept on table for unforeseen circumstances between the date of IPO and the date of listing, but also post-listing. For me, the post-listing, how the companies perform on a scale of 1 year, 2 year, 5 years is also very important, because we look at only a very short-term 15 days period or 10 days period of returns and all, but overall the company has to have in itself some growth plans, growth abilities, and then only you come to the markets, of course, with a reasonable pricing. And who knows, once you provide good returns over
Right.
sort of a good period, people will continue to entrust more money and allow you to have even larger funds to grow even faster.
Right, Mr. Chauhan, you're someone who's been there, done that, seen it all. Would love to step outside with the iconic statues of the bull and continue this conversation about the future of Indian markets, the future of global markets, and of course, the big AI conversation that everyone's having. No better spot to have a conversation with Mr. Ashish Chauhan than the iconic bull statue. And of course, Mr. Chauhan, the bull representing the bull markets. But in this case, we've got the NSE bull with the people of India. Tell us a little more about why it was decided and envisaged in this way.
No, this is when every exchange which is big has its own bull.
Right.
And bull represents the markets going up, because they tend to throw things up rather than down.
Yeah.
And that's how, but there are many sort of stories about why it's bull and not anything else.
Right.
Like if you go to Wall Street in New York, where New York Stock Exchange is, it is the bull which is on the road, and it's alone.
Right.
And many times people put other statues in front, like a girl's statue, and say that people are against it. But in India's case, the Indian capital markets exist due to its people, due to trust of its people, and that's where we also decide to have people of India represented in all their hues, from a farmer to a traditional housewife to a professional couples and everyone else. So that's where we have tried to build it. And of course, this is an Indian bull. You can see
Right.
it looks like an Indian bull, and that's what Indian capital markets have to have their own bull in that sense.
An Indian bull, clearly, and the people of India and Indian stock markets are very much in action, and the bull is clearly representative of that. Mr. Chauhan, when you envisaged Nifty, this was, say, what, 95, 96?
Yes, in 96 we started, but we started working on it in 95 itself.
The index was what, at about?
We had based it at 1,000
1,000?
On November 395 rates.
Wow, so we're now in November 2025. So let's talk about that journey of where the Nifty is today, and you reflecting back on this journey, and then also looking ahead on where you see this journey going forward.
In retrospect, you can be wiser and you can also make a lot of statements. But when we worked on Nifty, we didn't even realize how important that index would be, or how fast India would grow in 30 years from that date. The index, which started with 1,000, today is at 26,200 or something. And if you take into account the dividends that have come, then it's probably around 30,000.
Right.
And so effectively, it has given rupee term returns of almost 12.5% year on year, what we call CAGR, compounded
CAGR, right.
Annual growth return, which is way beyond what we would get in, say, fixed deposits, or much better than, say, gold or any other asset class, with the liquidity that you get. And that time when Nifty started, there were no index funds, there were no index derivatives. Today, index funds are ruling the roost in some ways, because they charge you very little compared to managed funds. But Nifty has become like a part of life. So when you were in class 10, what was Nifty?
Yes.
When you graduated, what was Nifty? And when you got married, what was Nifty? And so when you had your first child, what was Nifty? So Nifty is something you watch every day, every moment, but it remains in your mind, those milestones, that the index was such and such, the index was such and such. And that's where I think more and more Indians participating in the markets also will make the index that much more sort of aligned to people's lives in their what I call in their joys and their sorrows, their aspirations, and that's what for me a true index reflects.
And I know crystal ball gazing is hard to do, but for someone who's seen this journey, and you're also realizing how much India has changed today. The India in 1995, I mean, I remember I was entering college at that time, to the India of today, where, as you're saying, a lot has changed, and the kind of, I would say, growth we can expect going forward. I mean, we're now talking about 30% going towards savings of an economy that's at a $4 trillion, and the way this can explode further. What's your sense of what we can expect in, say, the next decade or so?
In a way, people's trust in their own society, in their own economy, in their own entrepreneurs, their own government matter a lot. So, I mean, we are, despite all the culture being 10,000 or 20,000 years old, we are still a young nation. We became independent only in 1947 and adopted our constitution on in 1950. So, it's only 75 years since we adopted our own constitution, right? And so, in some ways, in the early days of independence, we, in a way, were still skeptical. Other people were skeptical of our being one nation, right? And today, 75 years of being a republic, 77, 78 years of being an independent nation, we have come a long way. And last 30, 40 years have built up on that trust which people have, that confidence as one single nation, with, of course, the IT helping out, the public, in the digital public infrastructure like UPI or GST or faceless income tax, and many other areas, including, of course, automated stock markets, making you act like one, as one nation. And that's what for me is so much more exciting about this country, that last 30 years has been so good when nobody gave us a chance. Imagine what next 30 years will be.
When India has truly arrived and when the world is watching India. We've talked about all the positive factors, all the kind of tailwinds we're going to see as far as India is concerned, and they're very obvious, and especially with the kind of vibrant retail participation we're seeing in the Indian markets. But let's also identify risks, both short-term and long-term risk. Is there something you worry about? I know you're a very stoic person, but is there something that regulators should worry about, or retail investors should worry about as far as this kind of boom is concerned? And of course, markets will see cycles, but is there anything particular that concerns you?
As you rightly said, there are going to be ups and downs. Many of the youngsters who are coming in droves have not seen that downward cycle. And the world goes through its pace. It will have ups, it will have downs, it will have technological sort of strong years, technologically sort of a bad year. Sometimes the world runs ahead of hope, and like a pendulum, it comes back,
Right.
and things like that. And so that's where we need to also train our people. The greed is something where people want to get rich faster. Stock market, they think, is a place where they will get it faster, richer faster. That is not true. And that to become rich, you need to have a lot of understanding, a lot of patience, a lot of studies, and of course, a lot of luck.
Yes.
But finally, most of us have day job, like all of us, right? And so we need to focus on our day job. Don't make this into a profession unless you are really a professional in stock markets. And so we need to earn our money, we need to save, and then a little bit of that savings should go through stock markets. And that also not due to some tips that comes your way or something you heard on television or something you read in newspapers. It is a serious activity, and if you don't have that type of time, you can go through mutual funds or portfolio managers or index funds or financial advisors, so that it's your responsibility to increase the money which you have saved rather than making it act like a game. It's not a game, it's a serious activity.
Sure.
And it helps the country grow. It provides funding to the younger companies, and that create jobs, that create more employment and more savings that comes again. So it creates a virtuous cycle, but it requires you to also work on your skills which you have, not in stock markets, unless you are
Right.
a stock market professional.
So your message to the day traders in that sense, and many now becoming day traders who do have otherwise regular professions as well.
Absolutely, and don't trade in derivatives if you're a retail investor. It's not, it provides you leverage, but it's not, if you don't know the risk associated, you should not come into the derivatives market also.
At the same time, derivatives is definitely a fully fledged, I would say, mechanism that has emerged and is growing. So your thoughts there? There's been a lot of conversation around risks associated, of course, with derivatives, but those who know how to play the markets, or at least I would say ride the waves, seem to be quite happy with what's going on.
Now again, derivatives are good instruments. They allow you to manage risk. They allow also to speculate in a controlled way. It's like a car, car is a good instrument. But if you have not trained the driver well, that driver can be a menace to the society as well as to himself or herself. And that is true with the derivatives trader also. So if you are actually trained person, like we have a license framework for a car driver, and many people try to skip that also by doing other things. But
Right.
effectively for me, this is a serious activity, and there has to be some sort of a minimum requirement of education, some minimum requirement of the net worth, or ability to handle the losses that may potentially come your way. And that's where it's a much more tricky thing compared to just anyone being allowed.
And this is the one spot where every company wants to be, to ring the bell. Mr. Chauhan, when you're not ringing the bell here, either the opening or the closing, what keeps you busy? I know you read a lot. I know you write a lot. Your book, Sthit Pragya, is now a book that is being read by many, many people. But tell us a little more about your hobbies.
No, in a way, I mean, when you like your work, that is your hobby, right?
Yes.
So, I mean, NSE has been literally the first love since '92, and so it's a stock exchange. So you think it's something to do with finance, but it's also about being a regulator. It's about law, about also largely it's about service, because you also allow trading, and then clearing settlement has to happen every day when you buy or sell.
Right.
You need to have stocks in your account or money in your account depending on what you have done. And so it's a lot of responsibility, and it's also the largest IT user of India. In fact, is the first public digital infrastructure of India,
Right.
and the largest fintech of India
Right.
since last almost 31 years. And that's where India's IT progress started, from NSE.
Correct.
And so I'm also an engineer who set up most of the IT here from early days. And so I have to also ensure that NSE remains the world beater, the world number one in IT in terms of the stock markets, because NSE was also the pioneer of automated stock markets in the world. After that, New York and NASDAQ and all became screen-based trading.
And what are the number of trades we're talking about here, every day or per second? I mean, those are baffling numbers, right?
Yeah, so we do have capacity to take around 60 lakh orders a second.
60 lakh orders a second. Okay,
we
wow,
give
let
you-
that sink in. 60 lakh orders a second.
We give you response time in microseconds. So 1 second has 10 lakh microseconds. But next year we'll give you response time in nanoseconds. So it's 1 second has 100 crore nanoseconds and things like that. So we are pretty much the fastest exchange in the world now. And we are also, on a good day, we get 2,000 crore orders in 6 hours and 15 minutes.
6 hours, 15 minutes, 2,000
crore
orders. Wow,
right?
those
And
are
so-
baffling numbers.
Yeah, and literally there are not too many organizations of this type. For example, like UPI, which the entire country uses, does around 2,000 crore transactions a month. We do it in 6 hours with a response time, which is very, very different levels of microseconds and nanoseconds. And so this is pretty much where the IT prowess of India started, and it has been a pioneer, but also the thought leaders, execution leaders. And so large part of my time goes in sort of motivating team to think up better things, newer things, of course, resilience of IT systems, of all the other systems, and naturally cyber security is a big worry because of.
And that was my question. Does that keep you awake at night? The fact that today you're talking about this volume, the trust of like millions of retail investors, and ensuring that not only is NSE, up with the times in terms of technology, but also safe and resilient.
Absolutely. For example, in Operation Sindoor times, first day, I think we got in 20 minutes 40 crore attacks to close down our website. So,
40 crore attacks.
yeah, in 20 minutes.
Wow.
Not in a day, but and normal day is like 20 crore attacks, but this is like in 10-20 minutes you get 40 crore attacks, and so you have to be ready for that kind of peak attacks, and that's what we have to prepare ourselves for as an organization, as a country. That now literally, many times I say that border is in hand now with your mobile, right?
Right.
And so earlier you had army, navy, air force, police doing all that jobs. Today, all of us also have to be very alert because you get fake news, fake tips, fake even websites, which make them look like a broker's website, but they give you wrong information. They make you think that you make profits, but you try to take out, it doesn't come out. And every one of us has to be trained to differentiate between what is good and what is not so good. Although the line is becoming increasingly thin, we all need to be that much more proactive in learning newer things.
Yeah, vigilance of investors is critical. So clearly you're keeping up with the times. How much of AI are you deploying at the exchange, and how much are you using personally?
No, we do use all the new technologies that come up as literally the most important IT users of India. And naturally, AI is a very important technology. It is what we call the horizontal or infrastructural technology. It's going to change life transformationally in next 10, 20, 30 years. It will be there everywhere. But again, you need to introduce it in a more measured way because it has its own pitfalls. It tries to hallucinate. And so in many areas, we cannot use it like matching of orders and trades and settlements and all. But many other areas like reading up the prospectus of a company fast, it can read and give you like 200 points where things could be wrong. Or even software programming. It can do much better than a human would in a shorter programs, but then humans will be required to stitch them up, plan for that and things like that. And so a lot of things we are experimenting.
In reading the DRHPs quicker, or in pointing out
even the legal documents quicker, the court judgments quicker, and what we need to do out of that, because sometimes the court judgments come on the night, and next day morning we have to stop a company or stop a particular investor from trading or allow him to trade. Those are things now we can do faster because of the usage of AI.
Clearly, a lot is keeping you busy, Mr. Chauhan. But do you get any time for the other love beyond NSE cricket? Of course, we know about your role as far as Mumbai Indians is concerned and in setting it up. But do you get any time to watch cricket at all?
No, I do while traveling or sometimes on weekend if you can take time out. And I'm what I call equal opportunity watcher for cricket, so I can watch even a gully cricket match with equal interest, and so wherever I get to see that. Yes.
Great. Mr. Chauhan, we are very grateful at the Startup Policy Forum for your unwavering support to the forum. And as you know, with permission from the capital markets regulator, SEBI, we met with SEBI chairperson, we met with you later, and we have decided to set up the Center for New Age Public Companies. We clearly believe one of our clear mission is to support all new age companies, to support them, especially as many of them prepare to become public companies or the recently listed, I would say, new age companies, because our fundamental belief is that they need a lot more hand-holding, they need a lot more support, capacity building, institutional understanding from public market investors, and also vice versa for both public market investors and retail investors to understand that how some of the new age public companies differ from the traditional legacy ones. So we will be setting up the Center for New Age Public Companies with your support, and we would love to get your thoughts on why you think and the kind of role this center can play.
In a way, any company or for doing any activity, if you have a guide with you who can handhold, who you can lean on, who can find out other people to solve your problems if they cannot, I think it's a great help, right? And it will actually accelerate that journey in some ways, because in Indian old wisdom, we say the Guru Bina Nahi Gyan, right? And I mean, for me, in a way, if you can't, I mean, if you don't have a guide, you don't go to Mount Everest. And this is, I mean, listing a company is not going once, but going every day, right, and staying there. And that's where I think an organization like yours can actually add a lot of value in preparing people, helping them prepare that mindset, getting them experts to support them, handhold them, not only while preparing for IPO, but also post IPO, because post IPO the responsibility
Is
is
even
even more, right? And that's where I think creating that network of like-minded people, people who have gone through before, because sometimes those youngsters and the entrepreneurs want to listen to other entrepreneurs, not people like me who can give them lectures, but we have not done that before. And so they would rather work with those their predecessors or their friends or people like them. And I think that's a great way to learn and also contribute. When they become seniors, they can help other people. And I think that is the virtuous cycle we need to create.
As we say, pay it forward, and we are just a bridge that is trying to bring together this assembly line of gurus. You're a guru, and of course, there are many others who would then contribute to this ecosystem building. And as we say, we are super excited about many more companies coming here, ringing the bell, and this ecosystem growing and flourishing. So thank you so much, Mr. Chauhan. But we would, of course, love to ring this bell with you ceremoniously as we end the IPO Baatcheet today.
So you need to ring like a school bell.
Okay.